Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by John Deere. I've got Aaron Simmel on to talk about what's happening in the marketplace. Aaron, how are you doing today?
Terrific, sir, and yourself?
Can't complain. It is had some nice weather come through. We just need got some rain, which we desperately need, but not really anything that counts yet. But
I was going to say we got some rain.
Some in the fact that water fell from the sky, but other than that,
it did settle the dust for a good 12 hours.
It did do that. It did do that, and this is this is one of those unique situations. In farming and in the equipment business as a whole, where you've got the dynamics that come across with extreme weather patterns, right? So out west here, it's been dry since, I don't know, Oregon Trail, probably. I guess that's probably the best way to put it.
It's been we've been on a collision course with where we're at now for basically the last year.
Yeah.
I want to say, man, we got last year. Remember last summer, it was, we had a few showers here and there. And I remember we had a pretty decent rain end of August, beginning of September, because all the sunflowers in my ditch came back alive.
Right. Yeah.
We had a second crop of wild sunflowers.
Yeah.
And not a damn thing since. And what compounded that is we had the most beautiful winter temperatures we've ever had, where 40 was a cold day, routinely in the 50s and 60s. So was the wind.
Yeah, it was windy and warm.
That was the windiest. I've been out here 20 years, and that was by far the windiest winter we've ever had. Very windy.
But to your point on the weather pattern, if you go back to even like the end of 24, we had a very wet fall that year, and it was we really thought that moisture was going to carry over into the wintertime, but it didn't. And it didn't carry over at all into 25. 25, we had a few snows. I'm a pheasant hunter, so those cold, snowy days are what you look for. And there weren't that many in 24, and there was like maybe one day in 25 that was that way, and that was Thanksgiving. You know, was when that had that snowy weekend during Thanksgiving.
Yeah,
and then that was really it. When you start looking at the situation we're in now, it's to the point now where the snowpack, this part of the world relies so heavily upon irrigation, whether we're talking ditch irrigation or we're talking pivot irrigation. Snowpack in the mountains just wasn't there, right? It's just not there. So you're looking at a lot of farming situations where they just flat don't have the moisture to plant anything.
Right.
I had someone told me a stat the other day where there's something like 70,000 acres of sugar beets get planted in the valley here every year. And, think about sugar beets. People don't really think about sugar beets that much, but 60% of the sugar that you eat in the United States comes from sugar beets, right? The other 40% comes from cane sugar down along the Gulf Coast. So one of the areas that's the biggest, one of the 5 top producing areas of sugar beets is going to have, where they normally plant 70,000 acres of sugar beets, and now going to plant about 23,000 acres of sugar beets. All right, so you're talking, you cut that into less than a third of the crop. So that's going to have an effect on things. And you start looking at the same concept comes back over to corn. Not that western Nebraska, eastern Colorado is a giant corn producing area by any stretch of anyone's imagination.
No, but
it's the French.
We're a huge corn. This is the demand area. This is where it all gets consumed. So the fact that we grow and haul it close to ourselves is the whole key. Now there ain't none. Now it's all got to come from eastern Nebraska, eastern Kansas.
Yeah. So that was the point I was going to make, is that we're not like, the hinge of the corn market depends on what's happening in the Panhandle, Nebraska right now. But the forage that comes from this general area feeds a lot of cattle, right? And I think that's the other side of that too. So as you start looking at how these things converge, this has a huge effect on what's going on in the marketplace.
Real quick.
Yeah.
Feed a lot of cattle and just a few sheep.
There you go. Okay.
Just making sure you don't broad stroke that too much.
Yeah.
There's a handful of sheep out there eating a bunch of corn too.
My apologies to the North American sheep producer for not keeping you in the mix. But the flip side of that is, if you go to eastern Iowa, western Illinois, down the Delta,
kind of the central
rain they can handle.
Yeah,
kind of a big deal. Where they're having trouble getting stuff planted, right? And the guys that have stuff planted, it's rained so much they're looking at doing some replant situations. So you got this dynamic here where you start looking at what's going on. I don't know that I've ever seen it to where you have extremes on both ends of the corn belt, right? Where you've got really, 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 really dry and really, 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 really wet. And because usually one's really, really wet and the other one's okay, right? Or, hey, this part over here, we're dry. And because let's go back to 2012, like when Iowa and Illinois and the part of the corn belt burn up, we were in a great shape out here. It rained like it was supposed to. I think we had 25 inches of rain that year. And it was.
I remember that year being dry, but not as dry.
It was dry for us, but it was also, we hit our rain numbers. Like the bluffs were green. I remember that. That was one of the first years I moved out here.
Gotcha.
And I remember people going like, I can't believe how green it is. I'm like, what else is it going to look like? And then boy, did I find out. And so there's these extremes.
Brown.
And it's the thing about that is that those extremes, as they push together, like it's just, there's a dry line and there's a wet line, and they kind of come to those points, and it's going to wreak havoc on what we see happening in the marketplace for 27. Now, conversations I've had with people, I've talked to farmers that said, hey, out here, if because the way a prevent plant works, and if they can get some forage off the ground they can plant and get at least one cut in forage, those kind of things, that they can probably make the year work out for them just like it's supposed to. So profitability, again, is going to be slim, just like we've seen in the past. So this will be the third year of slim on-farm income, where that's going to have a direct effect on order writing periods for new equipment, obviously, and it's going to have another effect on what we see on the used equipment side. If you look at the current used equipment state that we're in now, the 1 to 2 year old stuff is still there, right? I mean, it's not as bad as it was, but it's not really getting any better either, right? So it's kind of stuck in the middle. That basically 5-year-old to 10-year-old stuff, 12-year-old stuff has kind of hollowed out a pretty big hole in inventory where it's just a big gaping hole right now where there's not a lot of that stuff sitting on dealer lots. But then you get older than 12-year-old stuff and you got the same stuff coming in and out there. You see a lot of auction activity with that 5 to 12-year-old stuff, which is not uncommon. You see it anyway, but you're seeing more and more of it show up to the marketplace via auction than anywhere else. So as you start pacing yourself through this and watching things move, there's going to have to be something that snaps on the late model, low hourage stuff, that 1 to 2 year old stuff, to generate the 3 to 5 year old and the 6 to 10 year old trade-in marketplace to come to the market and start working your way through that again. Not that I'm saying there's going to be a big auction thing, because I don't think that's the situation. But I think as you look at how interest rates play into that, how just pricing structures play into that, that's going to open the door up to, I think, some dealing that could take place in that. I think it's going to be earlier this year than what we've seen in the past, where they're going to know pretty quick whether they're going to be profitable or not this year, no matter where you're at. As in other years where they've had to wait towards the latter of the third quarter into the fourth quarter to really see what the profitability looks like. This year is going to be one of those years where I'm going to know pretty quick if I'm going to have any kind of profitability or anything that I need to do via tax situations when it comes to equipment. So I guess as you're looking at this right now, it's pretty quiet out there. I've talked to lots of guys across the spectrum. It's fairly quiet out there, but there are guys that are interested in looking at stuff. As you look at the marketplace, Aaron, what are you seeing?
Okay, what I have seen going on, there virtually is no wheat in the country.
That's a fair statement. Yes.
That that's going to be a hard impact on combines. And for us here, that's, we've talked about that on here before. That's typically our combine run is preseason wheat, and it starts about now, selling rigs in Texas and all the way up through the Dakotas, and then it's fall. So that's going to have an impact on us. Yeah.
Real quick on that. The thing about the combine deal, I think everyone should understand, is that the amount of combines, it's like the custom cutter combine crews are all concentrated in a very, very narrow area when you start looking at where they're actually based at and what the deals they work with and the customers that or the dealerships that they're working with. A lot of that's Western Kansas, Western Nebraska, West Texas, like those kind of, like, that's where you start seeing those come in through. So when we talk about how those combines move, why so many combines come out of this area and start working their way out as well. Quite frankly, this is where a huge bulk of those custom cutter machines come from, and they get kind of disseminated throughout the country, especially like you just talked about, Wichita Falls North. And that's really where that starts to work out of. So go ahead, sorry.
Yep.
I want to get that context.
No, you're fine. And the reason, personal opinion, being here 20 years almost, we put combine, we get done picking corn, cutting sunflowers, dude, it's after Thanksgiving. It could be almost Christmas. Blow it off and park it. Mm-hmm. That's what a combine gets. Blow it off and park it.
Right.
So it gets looked at the beginning of May. Hey, here we are, right? Mm-hmm. Man, we should do something on combines before we go into wheat. That is what usually drives us having the summer combine run versus fall, or usually summer's more than fall. Now, with no wheat to speak of throughout the entire High Plains, that's going to be a way different deal. As you said, conversely, you get eastern Nebraska. Last year was last fall was just about as dry. Let me back that up. They say almost as dry as we were. Long way to go, guys. But that's my father, old farmer speak. Well, we ain't had an inch for a month. Yeah, no crap, man. Sorry to hear that. But they're getting rain again, and pretty much all the way. Ohio was burning up last year, and now not. Everywhere's kind of fixed, but the good old strip up and down the middle here. So as far as the local market and the water issues, out of 25 stores, we have 1, 2, 3, 4, like 7 stores affected by water shortage. Every one of those 7 stores is, as Casey said, a sugar beet store. So we have a lot of regroup and regain plan and regroup and regain plan, and they have a water meeting, and they dropped it some more, and they dropped it some more. Now, not every irrigated acre within those stores is part of the snowmelt ditch water. There's, a third or so have their own wells also, but they use the ditch water. The well's just kind of there. I know of a couple guys who, this is why we have a well. Go out there, turn it on, nothing. I know 2 guys had to re-drill. So, yeah, you got a well, but haven't used it in a while. And, well, guess what? There's another $60,000 we weren't planning on this year. So the water thing is there's nothing good you can say about it, obviously. It's an evil thing that we just have to deal with. Talking with a couple guys, just like Casey said, looking at doing, if we got 30 days of water, we could probably get a forage crop out there. Yep. You and everybody else, and you're going to get a forage crop. You're going to plant some Sudan grass and hope it makes it and that kind of thing. So it's not like the world's going to be covered in irrigated tiff grass and irrigated alfalfa. It's literally feed by the bottom label you can do.
Right.
Yeah. Okay. Casey, who's putting all that hay up? Who's chopping it all? Because if those two jobs aren't done right, you have rubbish, especially if it's going to get baled. So that's a whole other thing. I'm like, one way or the other, we're going to, like we were talking the other day at work. I'm like, what about, we lived this in 12 in other parts of the world, not for us here. Now it's hitting us here, choppers. And everybody's like, we don't even have enough water to get things tall enough to worry about chopping. So there's that.
Yeah. So there's some dynamics.
As far as national marketplace goes, every week I get a call that blows my mind with the last minute category, right?
Yeah.
It's May 10th. Literally yesterday I had a guy call for a planting tractor in eastern Iowa. I would have thought he's about tasseled out by now, but that's the world we're in. And had a long conversation with him. He's plenty salty. He's not any kind of deal. But it's just what we've said. Everything's so expensive, and there's no 1% interest unless you're paying for it one way or another. So this is the world we're in. Like, I don't need that till then. It's a 300-hour tractor. It's not like it has to go through the shop for 3 weeks before it gets here. Wait till the last minute. Yes. Okay. Get it here tomorrow. Awesome. So, I mean, and it's just like last week, super, super, super quiet. You turn the page to the next week, and like in the first 2 days of that next week is all your catch-up calls. Like everybody's sitting in the tractor, screenshot that one and call him, screenshot that one and call him, and I guarantee you that's exactly what it's doing. Well, I don't like the way our finisher's working. We should look at something else. And Lord knows they're not driving the tractor. So they're on their phone and they look and, I like that one. I'll call next week when I got time and I'm not in the planner. That's just the world we're in. It's that time of year. But even with as bad as things are in ag in general, outside of livestock, there's no runaway by any stretch. But things are moving, and there's still a really, really hard line in the sand at 400. But I mean, things are moving. It's not a 8 tractors every day kind of world, but things are moving. And it seems, I know interest rates they've come down a couple points and that kind of thing, but it's surprising how different an argument 6.5 is versus 7. I mean, you're talking a point to half a point, and it's a huge different discussion on the phone.
It's a big difference.
It's not a program thing. It's what is it? What's the price? How's it set up? Let me think about it for 6 months, and that's the world we're in, man.
Yep. Yeah, I think it's slow churn, and you watch things going on. I will say this. I will say that with the current condition of auction marketplace to where the retail marketplace is today, those gap has closed dramatically from what it was a year and a half ago. I mean, like it's way more in line than what it was before. And I think you were reflecting what you see happening, right? The current status of the auction values that you see coming through are keeping a floor that I personally think is really advantageous for the marketplace, right? We're seeing, so I mean, if you're buying something or selling something, you're in a good spot, right? There's no real advantage for a buyer, no real advantage for a seller. Like everybody's in a band, if that makes sense, right? Whereas when things are kind of circulating up and down and things are going like,
we're at the point now we need each other,
right? Yeah. So there's some harmony there. So I am anxiously waiting to see what happens with 1 to 2 year old equipment over the next 4 to 5 months. That's going to have a big play as to what 27 looks like. Because as it sits right now, there's going to be less new machinery sold this year for order writing periods that for 27 delivery than there was sold in 24 for 25 delivery and 25 for 26 delivery.
Right.
So we're at that's still tapering off. And I can already hear the comments. Well, it's because it's too expensive. Like, yeah, you're right. It is too expensive. That's why there's a niche group of folks that are going to buy the new stuff. What's happening there is that's going to drive the used equipment space to be very lean. I'm not saying it's going to drive up prices by any means. I'm not saying that at all on used stuff. What I am saying is, though, it's going to create the holes in the inventory. The gaps that people are looking for are going to be accelerated one way or the other, right? You're either going to have a bunch of something and not any of anything else,
right,
or vice versa. And that's what we're seeing right now. We're seeing that we have, I'm not going to even say we have a bunch of 1 to 2 year old stuff. It feels like a bunch because of the demand for it. But with having that stuff there, that doesn't create the chain for that 3 to 10 year old stuff that people are wanting to buy right now, right? So as you go through those things, dealerships and, whatever, if you're selling your stuff and your own, whatever it is, you got to start thinking about, how do we get this from point A to point B? How do we get there, right? And those are some things I think they're going to change the marketplace a lot. You're seeing all this programming coming from the manufacturers. There's tons of low rate financing out there. Whether we're talking Ford pickups or Case and John Deere combines, whatever it is, like there's these big programming things that come out there. What I've noticed in my career, especially on the ag side of this, is that when used new equipment gets to be real stagnant after they program the hell out of everything, they start focusing on how do we help program a little bit of this used stuff so we can get that juice is flowing a little bit, and we're going there. Who knows when that'll happen, but we're starting to see some. In my opinion, you're starting to see a situation that is going to demand, hey, can we use some program money to move these things around and get lower interest rates or whatever it is that you can do out there, because I have seen a lot more over, especially the last 3 months, 12-month waivers, 0% for 12 months, 24 months, followed by some 3.9% or 4.9% or something like that to help kind of push those things along. So we're getting into that spot now where the creativity of the deal is gonna really start structuring how much of this 1 and 2 year old stuff we see happen and take place.
Yeah, for sure. You made a comment early on, Casey, about the gap, like say that, I'll generalize it a little more, 5 to 15 year old stuff, which is what? That's the stuff we talk about, that private party auction, dealer, doesn't matter. It basically, that stuff has one price.
Right. Okay? A universal price.
That market is one market. Doesn't matter where it's sitting. That makes it really damn hard to trade for that stuff.
Right.
Because, God bless technology, 4 pictures and a horrible description, and 30 seconds later, it's on Marketplace.
Right.
For more than I was going to ask for it. And he's already got people messaging back because it's not on the dealer. That's where they got to look for it. That market, because of the COVID shortage, $7 corn run up, all of that big rat's nest together, created that because all of a sudden my 10-year-old tractor's worth twice what I paid for it and all that. So that conditioned everybody to, I'm not trading a thing. I'll sell it myself and carry all these bags of money to town. But the market in general started that because of necessity, because it set itself up to allow for it. That's how I should say it. It set itself up to allow for that to happen. Handful of guys do it, prove how easy it is, and away we go.
Yeah. Well, it's like COVID, there were online auctions before COVID happened, right?
Yeah.
And then everybody started doing like, well, I guess this online auction things, and everybody's online, right? Well, that's kind of the same thing with the equipment thing during COVID. If guys had a piece of equipment they wanted to trade in, they were selling it on their own. Rarely did the amount of times that we took a trade in for someone that wasn't traded it in was just like, it happened, but about 50% of the time people were just selling it on their own because you could. So that kind of greased the skids a little bit for what you see happening when, like, Facebook Marketplace, Craigslist, these for sale by owner stuff like a machinerypete.com, there's for sale by owner stuff there, like those kind of things where those things started to grow and grab some traction and stuff like that. Now, when the COVID thing dried up, where you didn't have to start worrying about your trade in anymore, right? When you started worrying about what you're going to do with your trade and those kind of things, the piece that you have, that changed the dynamics a little bit. Brought some guys back into a normal cycle, right? But as it says today, we're kind of back in that spot again, where if you've got that 5 to 15-year-old piece of equipment, you've got options that you didn't have before, and that's changing the marketplace as well.
See, and I feel like what you said just a minute ago, with things normalizing and you brought your trade to the dealership, that brought in the 4 and 5-year-olds because they were getting sold privately as well because there wasn't any. That brings all of them in, but then you hit that 5-year gap and nope. We'll sell it ourselves. It flabbergasts me. I hear that every single day. I mean, that is just the world we are in. It doesn't matter what product it is, planter, tractor, combine. I talked planters with a guy last week who's done, not a last minute guy. So there's the other side of it, right? A guy in South Dakota's done planting, a guy in Iowa hasn't started.
Right. That's crazy.
That guy's like, I love your planter and I want your planter. I'm going to sell mine first. Okay. Hope it's here. That's where we're at. Yep. Guy on 4-wheel drive tractors. I love your tractor. I love your number, but I think we're going to sell ours and get a little more. Great. Go for it. Let me know.
Yep.
Here we are.
Yep. A lot of dynamic changes this year as we walk things through. So it's going to be an interesting year. Going to be interesting rolling into 27, what that looks like as well. So it'll definitely be interesting. So a good place to stop, Aaron. Folks want to reach out to you. Look at your High Plains wholesale deals. What's the best place to look at that?
Well, you can catch High Plains Wholesale on Facebook and TikTok. I share those same posts under my name on social media, Aaron Fintel, on Twitter, Facebook. I believe that's it. You can call me, text me, 30.
Aaron, appreciate you being the podcast. We'll catch you again next time.
Right on.
Stay tuned for more Moving Iron podcasts after these messages.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with ExactEmerge and get accurate singulation and spacing at 10 miles per hour. Or choose ExactShot to promote early root growth and cut fertilizer costs. And with FurrowVision, save time by verifying seed depth right from your cab. Visit johndeere.com/planter upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast. Got Rich Poston on site. What's happening in the economy? I thought it'd be a great time to have Rich come back on with all the stuff we have going on in the world right now. A lot of moving parts, a lot of things headed that way. But if folks really want to dive into what's going on in the world, they need to listen to your podcast. How can they find your podcast?
Go to criticalpointpod.com. You'll find some unlocked as well as locked up, and you'll find a subscription there as well, 60-day free trial, cancel anytime you want. But go to criticalpointpod.com, and you can also email me at criticalpointpod@gmail.com or rich@ag-financial.com.
Check it out, folks. It's great. You know, do you still put those little quick hitters out on Apple? On podcasts, Apple Podcasts?
I got to revise that, what's going on Apple. I think it's missing out of some because I changed the website a few months ago and the subscription. And then they said an upgrade was coming and I never followed through. But yeah, I got to check on that.
Okay.
But right the moment, yeah, target at criticalpointpod.com.
Right on. Okay. Like I said, Rich, a ton of stuff going on. We had an inflation report come out. We had a jobs report come out. Oil prices are big springs in that because we got the stuff going on in Iran with the Strait of Hormuz and how that's affecting the overall oil market. Plus, we got the bigger implications of that is what's that going to do to GDP of the world as well as the economy. A lot to bite off there, Rich. Where do you want to start first?
Well, we'll dive into the inflation report first,
Okay.
and because that's kind of like a delayed summary of practically all the crap that's been going on for 6 months.
Yep.
So anyways, the report came out, and I don't know if listeners will recall, but I've made some alerts earlier this year that I said if inflation goes over a certain number, just over 3%, look out, it's probably on its way over to 4. Well, it did that, and right away the government started even saying, well, it looks like it's going over 4. Today we got a 3.8. So, I mean, that's all the evidence I need to know that was a correct call. And that call was actually made last year for this year. It was just this year I had a level saying, hey, if it goes above that, we got, it's working. So the forecast has been for quite some time, higher inflation this year into next. I was saying that even before we started the U.S.-Iran, and then the Iran oil thing just layered on top of it to make it more likely we're getting higher inflation. Now, it's 3.8%. That was stronger than everybody expected. Stock market went down. That was kind of obvious it was going to do it. It was due to come down today anyways. But the core, I believe, was like a 2.8%. That's a big difference between that and headline, but that makes sense. Headline has the gas, the energy, and those are more volatile things. Foods, far more volatile. Commodities are more volatile. So what a lot of Wall Streeters suddenly were saying, boy, we got to keep an eye on core, because as long as it's dragging its feet, moving higher, that's the reason the Fed doesn't need to lower interest rates and doesn't need to raise them either. But they said you start breaking core above 3%, and more so if it goes to 3.5%, then the Fed's probably going to be pushed or pressured into raising interest rates. And it was interesting they were using 3.5%. The Fed will at least be talking about raising interest rates before 3.5%. But I agree, it's probably 3.5% or higher that they would get involved. And in years past, I always said if I was running the Fed, I probably would never raise interest rates so it goes to 5% even. I don't think anybody wants to see that. They want it done earlier. They want to nip this one and make sure it doesn't last as long as it did in 2022. So it was interesting, core holding back like that, because I was thinking everybody's just going to raise their prices for anything and everything because it trickles through. It's interesting. Oil is not as important as it used to be with the old alternative energy stuff primarily, but we're also more efficient using oil products. But the interesting thing is that the people have done some fantastic analysis saying if you drop oil production 10%, economy drops 10%. It's that kind of a relationship. I got all excited about what they were showing. I said, okay, I can deal with that, work with that. But now, no, this is different. I don't think we're going to take that hard of an impact. The Wall Street, Banker Street's been hopeful that's the way it is, but it's still a negative impact. We just haven't seen all of it yet. And in that core, people are saying, some things are starting to jump, some things are coming down. But you can see it's probably just a matter of time. It is going to trickle through and take it higher. So, yes, my forecast looking really good, and it's still saying higher into the end of this year, if not into next year, for inflation. And we got real average earnings, wages today as well. And real means it's simply adjusted by inflation. So what do you have left over? Well, that thing has been going down for quite some time. So what it's telling us, people are not getting enough pay raises to keep up. And let's see, I think it was the Heinz company, food company, the CEO, she came out and said, people are about run out of money. And Banker Street, Wall Street doesn't seem to care. Mm-hmm. I'm wondering if someday something's going to break. So that's I haven't paid that much attention in the past for real average earnings, but I'm my buddies here. We're cranking through the numbers using these business cycles to forecast it, and it's looking like the real average wage probably won't bottom to next year or the end of this year, which probably means, that inflation story is right. It's just going to keep going up. They're not going to raise wages fast enough, so it's probably next year when I actually expect a problem for the stock market economy. But that actually may be the year that people get a chance to get caught up, that something's going to help to raise those real average earnings. But it's not looking good this year.
Right. Yep.
It's not looking good.
Yep. So, okay, we had a job report come out. The job report came out, and it was 100,000+ jobs more than anybody anticipated it being, which is, if you look at past job reports, like this one was just it's almost like it was an anomaly. Like it was out, like there's someone forgot to carry one or carried one when they shouldn't have or something. But you see all these jobs, and Rich, I look around and I see a lot of people getting laid off. You hear about all these people getting laid off and jobs, this, that, and the other thing. Where'd all these jobs come from?
You're going to find another revision coming.
Okay.
Those jobs,
you're going to tell me. Yeah.
There's probably air in there, okay?
USDA's running the report, huh?
What you want to look at is the household survey, and that jobs number is going downhill. Doesn't look that good. And it just took a sudden jolt this year. All right. Then you look at the private, gosh, I might have the wrong name there. It's private, but it really means businesses. What are businesses saying? What are they doing? They're the ones saying, we're hiring 100,000 more people. Wow. But somebody did a study going back and they said, you know something? These businesses lie. They're saying this is where all these revisions are coming from. Yeah. And they want to make themselves look good because they got to keep their stock price up there, brother. All right. We got to keep going. This is what we've been doing for 20 years. Why would we stop now? This household thing, I've known about it. It's kind of in the model, but down towards the bottom of the list. I'm moving it up the list. This is a very nice clue that, we're probably going to see some revisions lower later this year. I'm not saying you can't get some summer improvement. GDP seasonally picks up around summer. You want to look at second and third quarter normally is the better quarters of a year for our economy and jobs. And then the fourth and first quarter don't do so well. And sometimes they tank. And we could see that slippiness and fuzziness there this time around too. So we may pull up a little bit. Consumer sentiment is still down in the toilet, the gutter, whatever you want to call it. I wouldn't be surprised it's starting to tick up by the looks of it. And it may tick up by summer. And I now call that my happiness indicator. There's other indicators that are just for happiness put out by a variety of companies. The Gallup poll, I think, still has one. But this consumer sentiment, I realize it's an economic indicator. It's about how are people buying? But it really does tell us their mood. And they've been in a bad mood since 2000. They've been in a very bad mood since last year into this year. It can pick up summertime, but I think it's going to be a fake out. I'm suspicious they won't be happy by the fourth quarter on into next year. So the overall trend, I think, stays down or at least coast along the bottom for how happy the U.S. people are going to be. And I think that links to what we're already saying with all this inflation problem, the real age, warning, the earnings. Okay. People, they're just not happy. That's all there is to it. And they got a right to be because when we look at the middle class and poor, they're falling behind financially. I'm beginning to think the middle class poor have been in a depression since 2000, frankly. Don't know how I can prove that. It's a weird one, but it doesn't look good. The more I dig into this very, very long-term stuff, we've been building problems after problems for a very, very long time. And, the day of reckoning's coming. Now, it would come anyways. Every decade we get a recession. I keep saying it's not to 29 to 30, but I got to tell you something. I will be looking over my shoulder next year. If we don't straighten some things around this year, I don't know. That machine can break sooner than what it has. 18% of the time in the history of this country, it broke so soon that if you did the math, it comes out to next year. Okay. So at least 18% probability. Now that's just patterns. When we actually look at the news and what are these people feeling? How are they doing business? You find, no, some of those times when it broke at 18%, really, there was 90% probability from at least the financial markets, something was going to break. When I start putting in today's information in, I'm coming up with 30 or 40% chance for a recession next year, not the 18%. The 18% is just a historical thing that tells me it might be difficult to time when it's going to break, And other than that, even during those times, you could look at the news and information saying, well, gee, it looked worse than 18%. It was up there. The warning was there. And we're building the warning in now. I mean, we got credit card delinquencies. We got auto delinquencies. None of these are very good timing tools. This can hang in there for another 2 or 3 years. That's probably about it. But what if it breaks next year, And the AI business, it was going down the tubes here, at least for the stock market a few months ago. It's come roaring back. Stock market's roaring higher. And I must say, some of the brightest people on Wall Street I've followed for many years, one of them's normally a pessimist about the future, loves to play the downside. He just said, you know something, this AI boom could be about 1 or 2 more years as well. So he was saying, be very, very careful betting against this thing, even though he loves doing things like that. But like I say, so to me, the rich are going to do well this year. The stock market's probably going to do well this year. Basically, everything else is not, okay? And some of it is just terrible, right? And the middle class and poor, I think they can, even if the GDP goes up somewhat, I say they're actually going downhill into next year. So very interesting country. You know, if you're one of the few, you're probably quite happy, actually.
Yeah.
And if you're the others, you're not, right? So.
A lot of pressure out there on everything you look at. And then you start throwing oil into the mix. You know, like we were talking about before we started recording, if you go back to 2008, we hit $150 a barrel back in that time frame, 2007, 2008 time frame. Record high, never been that high before. It was, oh my gosh, $4 or $5 a gallon gas and all that kind of thing. And that was when the Strait of Hormuz was working just fine. There's some other things out there. There was, shortages in supply, and that time China was ramping up, doing all kinds of stuff during that time frame for oil demand. But if you look at today, yes, the price of oil is $100 a barrel right now, kind of flirting back and forth between 98 to 105, kind of dancing around in that area. When I watch this, Rich, why is it not higher than it is? I don't understand that. Like, if that's such an important part of the world and all this energy is coming out of there, what's the big driving factor right now that's keeping the price of oil at $100 when it should be significantly higher than what it is?
It is interesting. The oil market, of course, Ted, did a very big jump when it first started, and that has done nothing. It's backed off a little. What's going on is they've recognized the fact it was going to take time to burn through the supply that we had. And it's coming down. The supply is coming down to meet the demand. The demand's doing its best to also cut. Now the worries are the oil market, instead of exploding from here, might just gradually move higher for the next 6 months because that supply gets tighter and tighter. We don't fix things. And some people are saying it's going to take 6 months just to get everything back to normal. And we haven't even stopped this thing yet. So we got to get it fixed. If it takes another 6 months to fix it, it'll be another 6 months. So it'll be a year from now before we're back to really flowing that oil the way we have. So that's part of it. That they didn't want to raise it fast enough because the oil industry the last 20 years has really woke up how significant this alternative energy is. They don't want to raise prices too high, shoot themselves in the foot, lose some of their demand, drive more people to alternative energy. They've also been moving oil around the world. These commercials, whether it's grain companies, meat companies, gold, and everybody else, they move stuff around the world easier and better, faster than ever before, more efficient before. And so some of the supply has been shoved around there to kind of act a little a relief to it, okay? But again, if you lose that supply and get too dangerously low to what we're using, it won't matter if they're shoving oil around. The market's going to then get nervous. Well, when are we going to fix this? So, I have targets of 123, 136, and 153 oil. I don't feel that confident about them today. I don't know as it really needs to go up. And I think the oil companies ever since Kuwait have done their best to try to make sure that if they have to raise the price during a crisis, they don't want to be accused of gouging. They'll do it anyways. Some of them have already doubled their profits, but they're probably telling themselves, well, let's not triple profits because somebody might go to jail. So I think there's a lot of this stuff they've learned over the years of saying, well, we'll get our piece of the action. We'll make some extra money out of this, but let's make sure we don't overdo it. And especially let's not shoot ourselves in the foot on the idea of more alternative energy coming online as well. So just an interesting mixture there, because if you look at the cash market, it's been running high basis. I forget the actual cash price or the basis level right now, but it's running high. So you can tell the futures really has had this attitude that it thinks this is not going to last that long. Whereas the cash market is saying it would rather, worry what if it does last longer, because it's looking at the actual supply and usage. So the cash market is actually doing a better job than the futures, which normally with speculators and futures, like in the grains, we would expect the speculator to pay way too much for that grain, right? And here in the oil market, they're saying, "Oh, I got to be careful. I don't want to pay too much."
Right. Yeah.
So, remember the transitory speculation in 2022 on inflation? It's like the oil people are not necessarily oil companies. It's really the speculators are saying, well, this can be transitory. Let's not get too carried away. And that's where it could be very interesting that we could get this slow grind higher as the futures market gets caught behind, right? But not a reason to explode because, hey, we're already there. I mean, the war is fully developed and things like that.
Yeah.
So it's a weird time, but yet you can make sense out of it. You can run the economics and see, okay, I kind of get this. I'm surprised you did that way, but it works. And the next thing with this inflation, if oil sets at this level or even comes down very, very slowly, the longer it takes, these long-term averages of oil prices just continue to go higher and then will level off. Well, that's going to continue to make an input in long-term inflation anyways. So the oil doesn't even have to go any higher. It'll propel inflation higher, at least for the next few months. And a lot of people don't understand that yet, I don't think. And then, of course, oil can trickle through everything and prices. Not as well as it used to, but it's still there. So I'm more worried if someone said, what do you worry about, the next increment up in oil or the next increment up in inflation? I'm more worried about the inflation because I think oil's already done enough that there's still lingering inflation coming down the road here at us.
Yeah. The inflation thing, this will amplify that if it continues to grow and get out of control. But, when you look at the world, Rich, and these kind of situations pop up, you take a look at country or, kind of like Africa, for example. I think there's 54 countries in Africa, if I remember correctly, something along those lines. And typically when these kind of things happen, I think somewhere around 60 to 70% of the countries go through some sort of a coup, right? And one of the biggest things that comes from oil right now that's really stressing the market more than anything is not necessarily just oil, but the fertilizers that come from it and the food production along with that. As you're looking at some of those scenarios rolling out, when you start looking at fertilizer this time next year, right? And to say things keep trickling along where they're at, what are your thoughts there, and how do you see that reacting to what we see in the marketplace right now?
Boy, if it could hold these oil prices, and of course you also have to keep an eye on gas, LNG, and natural gas. If it could hold them up here at these levels all the way through the rest of this year, then I think that's long enough to get into the next year's production. They're still going to have to be on the high side, but it's fascinating how quickly they can lower it somewhat. But keep in mind, almost everything in this country, when you put it up quickly on a crisis, it comes down slowly. Okay.
Yeah.
And I learned this for some years ago. I was doing some business with some large dairy companies, and they said the same thing. They said, boy, every once in a while we get clipped good and everything just soars. But he says, we take our time lowering prices because that's how we get it back, and we make something in the end out of it. And they even mentioned 6 months. And the weird thing is I went to the government and pulled out some of their data. And lo and behold, I found, okay, we lower it down. Then the businesses, they don't lower it down to 6 months later. I mean, they might lower a little every month, right? But again, also remember, we're talking percent change though. When we look at actual prices, you get brief dips, you get a recession knocking it down, but generally the price never goes back to any kind of a bottom. All right? We've been paying more for 1,000 years, okay? That's just how it works. So we get excited about inflation coming down and we're thinking, oh, we're going to get a bargain. But the only bargain we get in this country is when you have a recession once a year. And then the problem is you're sorry you're getting it because you're probably losing your job at the same time.
Well, yeah, that makes it tough, yeah. Yeah.
All right. Otherwise, inflation has always been what it's always going to be. And I realize people love to beat up on the governments and printing money to make inflation, but I can't quite get the numbers on it. I'd love to write a book about this. Can't quite get the numbers there, but I got to tell you, no, the real inflation's gone on for a very, very long time. And it's you and I and businesses in the stores. We create a good chunk of that inflation. Governments and money printing create slugs sometime that is way out of hand, and then we run into a problem. But we normally fix it fairly well, fairly easy. most of the time, the government is just, it's almost like somebody the other day even said, the Fed Reserve seems to have an automatic rule. Every year, print 2% more money. And they said, if you think about it, what's inflation? 2%. Okay.
Right. Yeah.
So I'm never as negative on the Fed as probably a lot of people in this country are. I just don't see where that's really adding up like that. But yes, governments can print too much money and you have to fix that. But we also have an issue with our type of capitalism. It's just too easy for these businesses to just say, oh, I didn't make enough profit last month. All right, raise our price. And right. I'm surprised how bold some of them are. Just in the last 6 months, there's been at least 3 big global companies come out and say, well, we're raising our price because we want to make more profit. Right. Yeah. Well, you know, and the problem is you look at how capitalism works. You're saying, well, if you can do that and get away with it, means you weren't charging much enough anyways. You got pricing power. And nobody ever seems to ask. They keep thinking that consumer will send a message sooner or later saying, OK, I'm not going to buy any more from you. The heck with you. The heck with your profits. But, you know, it's difficult for any of us to truly cut. We keep thinking. I realize that video game, I could throw it out in the trash can and never buy another one ever again. And I can save some money there. But I keep hoping, well, I don't have to because maybe I get a pay raise next week. And now I can get caught up. So people don't cut the way we're taught in the textbook. This capitalism stuff is just wrong in some things. And it's harder today than ever before. We do require a lot of things just to get by, more than what our grandparents did, just to have a job and get around town. Yeah. And so that whole theory where they just keep raising prices, they don't seem to acknowledge how much it's really hurting, especially the middle class and poor. The rich, they may argue a higher price is hurting them too, but the problem is they're making so much money from the stock market and the profits from those companies. And if you look at it today, who's driving the inflation higher and higher and who's driving retail sales? It's actually the rich, which just boggles my mind how a few percentage of the population can actually be holding up all the stores and businesses better than you and I can. It's just mind boggling. We're really getting into some wild statistics how this is working. And I tell you, the next 20 years, I fully expect a different kind of capitalistic system in this country. It's coming. It's got to come. All right. Yeah. And there's a lot of scared people out there now as they see this data coming in and seeing the numbers, and they're just saying, and yet they still want to preach it. Oh, we got to have the faith. We got to stay with this. This is our book. This is the Bible of capitalism. Don't change it, you know. And well, of course, if they're winning, why would you change it, right? On the other hand, a smart person would say, there's a day of reckoning coming. Maybe I could help out instead of just waiting for that day of reckoning. Mm-hmm. Back in Europe, when they waited, some of them lost their heads with the guillotine called the French Revolution. So, right. You know, crazy times, and boy, we're off to another year of craziness. So, but like I say, for the stock market, I'm optimistic. Okay. And the people can get involved with that. But that's another pet peeve I've got. People are saying, well, the people need to invest more in the stock market. They actually get money back if they're not getting a big pay check. Don't get money, you know? And I'm saying, hey, dude, the S&P 500, $7,000 a share. Just 10 years ago, it was $2,000, $3,000 a share. If the guy only got a 2% raise all along, he could have to spend more than all those pay raises just to get that seventh. Where does he make money out of this?
Right. That's exactly right.
So, you know, I'm very pleased with some of these younger generations. They're catching on to this more than the oldsters, although the old people also, some of them actually know it and just don't want to talk about it. But this is going to be very interesting and a whole lot of fun and positive stuff here coming in the next few years here. But right at the moment, things might get worse before.
Very true. Very true. Very true. All right, Rich, good place to stop. If folks want to reach out to you and get more information about your podcast, where do they find that at?
Yes, go to criticalpointpod.com and you can scroll down through, and there's at least like the 5 recent ones down at the bottom. Yes, that's scrolling so they don't stay up there very long if they're locked up or something. But there's also like special reports there. There's a blog section, a free newsletter. So just have some fun with it and look through some things. But again, with that kind of a free trial and cancel any time, get on board. I'm convinced you'll, you know, I have a 90-something% retainer or keeping people on board ever since the 1990s. So, and I use my stuff personally, how I invest my own money. I try to make a living even out of the stock market these days, even though I'm running a little hobby farm that I got to run back out to there and do some field work. But this is what I do. I love it. I've done it for so many decades for big companies and little companies. And now I'm just dealing with the public saying, here's my stuff. Take a look at it.
Yeah. One thing about Rich is still, it's that when I put your money where your mouth is type of thing, I mean, he gives you 2 months free to use it. So, I mean, it's not too many people give you a 2-month trial to do it. So it shows you how well he thinks what he is. And like you said, I've used this stuff for a long time, listened to this stuff for a long time, and it's well worth your time to check it out. So, Rich, we'll keep doing what you're doing over there.
All right. Thank you.
Okay. Rich, appreciate you being the podcast. We'll catch you again next time.
All right. Thank you.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, Instagram, LinkedIn, and wherever else I am at Moving Iron LLC or Moving Iron Podcast. You can also go to Farm Journal's Ag webpage, and you can listen to the podcast there. Or you can check it out over on the YouTube channel, which is Farm Journal's YouTube channel, and you can see the video version of it there. So with that, I'm Casey Seymour with Rich Posson and Aaron Fennell. Let's go move some iron, folks.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.